Good afternoon, everybody. Mark here at TapeTally.com for your Week 22 recap. This week we saw the markets down about 3% across the board. If we look at the SPY, the Qs, Russell 2000, Dow Jones, and the Canadian markets, all down near 3%, and actually the Russell 2000 was over 3%, almost 4%. Gold and volatility were up based on the fear trade here. Typically when markets go down, people put money into gold, and obviously volatility will be going up with the uncertainty in the market. So this week we're going to maintain once again the ratings that we had last week, with neutral across the board for the US markets and bearish on the Canadian market, neutral for volatility, although I am leaning to put that to bullish here soon, and bearish on gold and the oil markets here. So let's talk about some reasons why I'm maintaining those new neutral ratings on the market. I mean, we're down quite a bit, so you may be asking yourself, well, why am I not switching to more bearish? So I think one thing is that we've only had a 10% correction from the highs here. It hasn't really been that bad. I know last week we saw, if we jump to the daily chart here quickly on the S&P 500, we saw, we really tried hard on Tuesday to make a bounce, and then, Wednesday, Thursday, and Friday was actually quite bad as well, and we broke this low here. So, it's taken basically 4 months to make this rise, 1 month to get rid of it. That's the way bear markets typically work. They take the stairs up and the elevator down. So can we see more downside here? I think so, but I think that the higher probability play here is to play for a bounce here. There's a lot of negativity in the markets, although I do still see quite a few traders talking about trying to catch a falling knife here to catch the bounce here. And that's why I'm maintaining my neutral. It's negative, but it's not extremely negative yet. And basically the proof is in the pudding. I mean, I pay attention a lot to the stocks that are acting abnormally each day. And if I don't see the market breadth overall is just not as extreme as I would like to see in order to start playing for a bounce. So we need to see more fear in the market in order for me to get bullish and start playing for a bounce here. So are we near a bottom here? To be honest, I think so. I think that is coming soon, but I will not let that bias affect the way I trade. I will trade down with the market. I'll continue to play volatility if need be, and we just trade what we see. So if we go through the markets, I mean, they're all basically the same. This week I kind of wanted to talk about technical analysis. I received a question today this week about technical analysis and why I use it instead of fundamental analysis, and I kind of wanted to go through that. So basically, the way that I feel is that if you want to succeed at trading, you have to have a solid understanding of technical analysis. I mean, you can use all the fundamental analysis and economic data that you want, but at the end of the day, technical analysis, it sort of organizes the market data for you, so you can develop a practical approach for finding ideas, managing your entries and your exits, and determining your risk parameters. It's not kind of a way just to analyze the market action, but it kind of gives you a complete basis for all of the decisions that you make. And we need to, as a trader, the way that I trade anyways, is that I like to trade the momentum, and I like to trade wherever the hot market is, basically, whether it be up or down. And my main goal is not entries and exits, it's mainly just managing my risk, and that's basically what it is to technical analysis. I mean, technical analysis, we can talk about all these trend lines, and there's so many resources out there about trend line breaks and support and resistance. I mean, we can continue to draw this, and I think one day when I develop a course here, I may, delve into more of the intricacies of it. But I mean, you can draw lines all over the place here. But it does give you market structure, which is kind of important. Okay. Another thing that I received an email about is somebody had sent me a stock with the story, with a link to a story about the company. And I mean, it looks great. You read through the article, looks wonderful. The company looks like it's going to do well. Then when you look at the stock chart, totally different story. So number one thing is that you can't confuse your opinion of a good company with a good stock. Basically, good stocks move in the direction of your trade. That's basically it. There's no good companies. People lie, as I like to say. People lie, price doesn't. So there's no good companies. It's basically just good trades. You need to think like a fundamentalist, but trade like a technician. I read that somewhere. I wrote that down. I can't exactly remember where the source is for that, but I wrote that down at some point a while back, and I follow that quite closely. It's kind of comforting to know that other people may be interested in the stock and whatever, and it's got great fundamentals, great balance sheet, everything. They're great with cash, but I mean, here's a perfect example. Let's take a look at Apple. I don't know every detail of their fundamental of their balance sheet or anything like that, but I know that no matter how good the company is, let's just jump to a weekly chart here. Hopefully this data comes up quickly. Okay, it's not coming up, so we'll just stick with this. Let's try one more time here. Nope. Okay, taking too long. Let's just jump right. I know that the long-term trend line was somewhere here. When it starts getting away from its long-term trend line like this, when it starts becoming exponential, there's no fundamentals that are going to support it. So when they blew out earnings here on whatever it was, April 25th or April 25th, it's pretty strong. The probabilities are the market was weak at that time, and it was probably going to fill this gap. I mean, we can tell here it blew out earnings, and look, it's been going basically straight down until the middle of May here. So let me just take that out. The reasons behind why a stock moves, really, like the news, you can talk about, there's a number of things that can move a stock, basically, like stock splits, buyback programs, analyst revisions, conferences, any sort of FDA reports for biotech companies, insider transactions. There's a lot of things in there that can move a stock, and basically you can't become obsessed with all of the different media things going on. Basically just have to do your job, which is to objectively observe the supply and demand imbalances in the stocks. So basically, at the end of the day, it's listen to the market. The market does not lie. That's it for this week. Have a great week.